All right. Good evening, guys. This is Ken at Tortoise Capital. This is the small group coaching session for cohort 2 on August 13th, 2024. And have you heard from Joe at all? Is he still
Yes.
traveling? Still traveling?
Yeah. Yeah, he's back. He said he was going to email you if he didn't
Okay.
already.
No, I hadn't yet.
Okay.
Okay.
Yeah.
Well, for my check-in, been working hard this week with the Army officers on experiential learning with creativity. I put them in a bunch of sensory experiences today where, they were wanting to hear a lecture about creativity, but I put them into a situation where they had to listen to a situation, respond in writing quickly with their gut check, and then share that with others and compare notes and react to the things that emerged out of there, kind of rapid fire. So catching them by surprise. Just to start conditioning them to start thinking a little more flexibly. And so it's a new program. Seems to be going well. We've had some senior guys from Army University watching what we do, and they're very excited about what we're doing. And looks like we're going to get some more research opportunities with Ohio State and University of Pennsylvania. And it's interest is gathering everywhere except inside the faculty of our building. So we're contending with cultural resistance and if not outright skepticism. So business as usual. So aho, that's my check-in.
Mm.
Well, I just spent a few days. We got back from the lake finally, so trying to get my brain back into things. It's summertime though, so oh, so not much going on for me other than
So you started working with Claude. Which one are you using? 3.5
three
Sonnet
point
or
five. Yeah. Well, so it's kind of came from we had 2 weeks ago. Like last week, I was like I didn't do much, but 2 weeks ago when we had that, we were discussing the different ways to calculate, you know, the the direction that Mexico goes and just try to figure out all these things from how determine an OR3, what's the
yeah,
probabilities and
yeah.
so I started thinking about that for a few days and then so I'm like, oh, okay, I guess this is not a job for it's a job for Python, which I know some of, but not enough. So I start, I'm like, oh, I guess I'm a student of that now because it's great at that kind of thing. Anyway, and then I was spent 2 days chewing away and I was like, I'm just gonna take this is gonna take me forever. And then I started thinking about what you've been saying over time, and I'm like, well, I wonder whether it can like speed up. Like, there's so many mundane things you do when you're coding, right? And especially when I know how to do it, but I don't know the language well enough. So I just opened up Claude, asked it a
Yeah.
few questions,
On call.
was stunned. I was like, you got to be kidding me. It just starts. I mean, it's you have to be smart to use it. Like, you can't just say, create me a strategy for trading. It's but and you keep I'm correcting it, but I read through your stuff again how you kind of coach it along and give it, and I've been making it make artifacts. So by collective we, I'm working with it. We create a strategy for something, and I'm like, okay, create an artifact of this that I could remind you of it later because
Yeah.
it forgets everything you say.
Yeah.
And then so I'll start a chat. This is how we do this. This is what we're working on. Unbelievable. Like I'm stunned.
What
Stunned.
I've learned to add to my process is to have the final output in mind of what it is I want to produce, and then start asking a series of deliberate one step at a time, going from broad to specific, and then get there. And then if I'm satisfied with how that all sort of went, and I have the output that I want, I'll say, now I want you to go back to the start of this thread and give me a summary step by step of what we've done as a process, make it a recipe. And then I validate that. And then I said, now examine the recipe for ways to improve it. Are there steps we could have cut out? Better prompting, eliminate non-value add, and just keep improving that recipe until what I get at the end is a really concise, logical recipe that can be used for a bunch of different things. And then I can call that as an instruction set, just save it in my cookbook of recipes. Like, I wanted it to be an excellent coach in the style of Socrates and Aristotle.
Mhm.
So I said, I'm going to give you so I wrote a prompt. So I'm going to give you 10 foundational documents from that genre. And what I want you to do when you're ready, you tell me ready, I'm going to upload one at a time. When I upload it, I don't want you to give me any output. I just want you to analyze it, categorize it, and whatnot, hold that, and then say next when you're ready for the next document. We're going to keep doing that, and you're going to keep adding to this ongoing set of notes until I give you the last one. When I give you the last one, I'm going to say finished upload. And then what I want you to do is take all 10 of those and condense it into a single summary, an instruction set for a coach of that particular style. And I said, do you understand all that? I said, yep. I said, you ready to upload? Yep. And I uploaded things like Aristotle's Nicomachean Ethics and all the other shit, all the usual suspects. And then it output that into a summary of those 10 foundational documents, just as you wish. I said, now what we're going to do is engage. I'm going to upload this as your persona, and I want you to engage in a coaching session with me that complies with the ICF standards for coaching, integrity and all that shit. And I said, you got all that? I said, yep. I said, now here's what I want to explore. I want to explore the topic of leadership and leadership development in a volunteer youth soccer organization in a community that's staffed completely with volunteers and as kids of all ages, most of whom are not ever going to play at a competitive level. Here's what I think about that stream of consciousness. It then started asking me clarifying questions. What do you mean by this? How about that? What about this particular topic? And it was building on, and so we ended up in about a 30-minute dialogue, and it was as good as any coaching session I've ever been on the receiving end of. Perfectly consistent with the requirements of that style of coaching, and there's about a dozen different styles of coaching. And so I then said, now go back and process that entire routine as a single recipe, which was, I want you to be trained as a certain thing. We uploaded foundational documents, analyzed and summarized them. You gave me a test example and compared it, and we pronounced it good to go, and we improved the process a little bit. That's my recipe now for training it to adopt a particular persona. So I could say, all right, I want you to be a cultural expert. I want you to be a risk manager. I want you to be a quantitative analyst. I want you to be a guy who analyzes market sentiment as expressed in talking heads, and it can do any of those things. I need you to be a lawyer. I need you to be an ethicist. So that little recipe is now a super prompt. And it turns out that it's basically a publishable document on how to do Socratic coaching, just by its own self. And then the recipe itself is a product that is of interest to people. I had some guys there's a philosopher in Denmark, Ole Fogh Kirkeby, who's the guy who 25 years ago resurrected the Socratic coaching style from the ancient texts and modernized it for the current world. One of his grad students is a friend of mine and is an expert in that style of coaching. I said, hey, here's the style sheet for that protreptic coach. which is the Greek name for that style of coaching. And here's a session that we did. What do you and the boss think about that? And he sent me a note back today. Says, yeah, that's exactly the way we would have done it. So I've sort of validated that as a process to achieve world-class subject matter expertise. And it took me about 2 hours to do the whole thing, soup to nuts, including the final dialogue from a blank sheet of paper. It absolutely blows me away. And I go into the military college and all they're talking about is we're worried about the guys using AI to cheat on stupid essays. It's like, fucking, you guys have no idea. Just killing it. So anyway, it does not surprise me that it can do that stuff with Python. Claude is especially well known to be effective at programming support, but all of the literature says you really got to know what it is that you want it to do, because otherwise, because you always got to go back and error check.
Well, that's a good tip actually. Because I've only been doing this for like a week and a half now, so I'm learning, using the things that you've said and just experimenting with things. I'm learning what to do with it. And today I started this afternoon, I asked for more. I'm getting a little more complex on what I'm looking for, and it just started building all kinds of garbage, and it would forget what we did before and all this. And so I started to do I didn't really think that I was doing that, but I guess that's what I was doing. Is I just built it a chunk at a time. I said, "Don't touch that."
Yeah.
Right. Mark it off. Don't touch, and then just keep going down. And but if I wanted, I wanted to pick a profession that could utilize AI well. This this is a good one. This is a good one.
Yeah. Because if
So, but
you
you
can
really
tune it
got to know
right,
what you're doing.
yeah, if you tune it
Yeah, and if I
right,
did it,
yeah, you got to tune it right, and you have to sort of idealize you on your best day, and you want to behave, and you want an advisor who always behaves like you on your best day. And so when you can
right?
define what that is, then it acts as a nice backstop for all the things that you want to do.
Yeah.
Am I really seeing that,
But
or am I reading into it? That kind of thing.
yeah. Well, and I can have it convert. Like I've built all this stuff in TradingView already, and then so I just say, well, can you convert this to multi charts? It says, yeah, sure.
Oh,
And and then it just converts it over, and it
yeah.
says, well, I don't have this capability and this capability in multi chart. So then we work through. I fight through how to make it do it because I'm cheating now. I'm like, how do I overcome your deficiencies and make use of your strengths? So if I didn't know anything about logic or coding at all, it would be hard. But my knowledge is enough that I can. And I read you were talking about
Yeah.
hallucinations.
That was the biggest
So
insight that I have not seen that in the AI literature yet. So when you have a
yeah,
very good lockstep process and it's working, it's working, it's working, it's working, it hallucinated on step 17. That doesn't mean you throw away the whole thing. What that says is up until step 16, this thing was right on target, and then it made one step that was out of whack. That is the equivalent of human creativity. It's the surprising thing happened on the way to the forum. And the machine's hallucination has exactly the same purpose, function, and characteristics as human creativity. It's usually bad, sometimes harmful, but occasionally you might be lucky. And so,
yeah,
so whenever you get that far, you say, okay, up until the point of hallucination, I probably need to summarize that into an artifact. And then maybe you have to start a new thread because you're running out of context window. So one of the things that I've learned to do on the threads is to ask it to monitor its own approaching the limits of the context window now, sir. Because what it'll do is when you have a series of questions and answers, each next call and response includes all the previous conversation in the
right.
context window.
It reads everything.
So it's
Yeah,
cumulative, and so as you start getting up to a certain degree of complexity, then it's it's using all of the context window for the upload and then only has a small amount left to produce the final result. So you got to periodic. So if you're monitoring that and have it warn you, hey, getting close here, you can then do a summary that says, hey, I want you to, as efficiently as you can, summarize all this previous line of reasoning. So when we start a new thread, we don't lose any ground, but we've preserved a large amount of
Right. Yeah.
content.
Yeah.
Now that works
Yeah.
really
Yeah.
well. That works really well on non-programming things. But my sense is that if you can just chunk program code into sections, you may be able to start
Yeah.
fresh each time. And I'm not sure,
Well,
but in terms of complex
well, the
reasoning,
thing
it's
is, it
terrific.
does it, Python, it's way better at. It doesn't know multi-charts well, so it
Yeah.
keeps doing it's same mistake every time. I'm like, I just told you this. So I've started to feed in,
Yeah.
I've started recording snippets and I just feed it back to it. Remember, this is how we do this, this is how we do this, let's go.
Yeah.
Right.
Yeah.
And so that's been good. So I'm learning a lot that way. And I'm finding I've started like I just the other I coded the seasons, the MACD seasons with the
Yeah.
Bollinger Band, and then I got all that made up, and then I put a new chat, copied the code in, said, okay, analyze this code, tell me just what analyze it. So it
Yeah.
gives me this thing and what all the things it can be used for. And I said, well, how would you use this? And it starts going off all kinds of things. And I'm like, oh, that's cool. I mean, I'm sure that some of this is stuff that you've thought about and that you use it for, but you don't say it because you're trying not to give us too much information.
Yeah.
But I was like, well, that's an interesting point. And then it gives cautions. Well, this could do this
Yeah.
and this. So that's not really hallucination, other than sometimes it just goes get some wild idea. It's like,
Yeah.
well, I don't know if that works, but how else? And then
Yeah.
I've got some really good ideas. So
Yeah,
I'm impressed.
what it really shows is that the power of the thing is that it leverages the human. It makes the human more of what they are. We're not ready to go to use case 3 in which you just say, fucking, I don't know. I'm going to ask you what to do and then I'm just going to blindly do it. That's really
Yep.
disaster. But use case 2 where it's leveraging the human and you get that synergy is really powerful. I'm trying to get that into the leadership curriculum for our college, and I've been able to use Claude to demonstrate that the future battlefield that the headquarters has described requires an adjustment to Army leadership doctrine about what it is that we're looking for. The way it's written now is that we're looking for guys that have respect for data and process and systems thinking and standards of practice. But if and only if that all fails, then begin using your creativity to explore what is now apparently a new area. Whereas the modern battlefield is so chaotic that what you have to have is a parallel processing of pure creativity and your systems thinking working in tandem so that as soon as you get a hint of something unusual, you've already got the creativity engine already on board and ready to go. And you don't have, it's not a cold start. Whereas the current model sort of says exhaust all your typical ideas first, then and only then begin to think out of the box. And that's when you're battling an intelligent adversary who knows your doctrine because you're an open source society and they have access to all of your stuff, they can easily template you and use it against you. So you can't wait for failure to begin thinking something new. You got to have good ideas on board before you need them and ready to call on them and go. So that requires a very different approach to the way we've defined leadership requirements, the way we need our executives to be thinking and how to use your staff in an intelligent way to monitor the normal and the abnormal simultaneously. We're not doing that very well right now, which is why we're continuously surprised at what Ukraine is finding out works in the battle against Russia. They're thinking of shit we haven't thought of, and they're doing it on the cheap and fighting those guys to a standoff when the odds were completely against them. So translating that into the trading environment, it's like sort of continuous exploration on the boundaries. It's almost while the machine is automatically digging and working, you're working on the periphery to find the next
Well,
advantage
yeah.
before you need it.
So one of the have you heard of Tilson
Yeah. Yeah.
Tilson T3?
Uh-huh.
So one of the troubles I'm having in coding my exit system, I'm just working on the exits on long only right now. One of the troubles I'm having is that the trying to define when does a regression line roll over, and the RL10 has quite a few
Yep.
hiccups. And so I said, this is incredibly, and I'm building out trying to give logic to why you would take that rollover, but not that one, because I can sort of see it, not as well, you, but I could
Yeah.
see that's just a burp. And so I kind of got so frustrated that I started searching for, you know, other methods of can I emulate a good enough version of the RL10 that is faster than a super simple moving average. I couldn't get any of the moving averages to work. And then so I started researching through Claude and I found out this Tilson. And Tilson is designed to be really fast at the beginning, but yet fairly accurate. And I should say, I'm not done it yet, but when I'm finished, I'll send you some overlays of the RL10 and some particular of the Tilson. And I probably 95% consistency of the RL10 that with no, it never goes down, right? Like that's the problem with the RL10 is I try and code it so when it turns down, get out. I don't want it to because 90% of the little those things they're not exits. So this will go consistently up. It'll almost go flat, but it's consistently up. So it's perfect for me, I think. I'm excited about it, and I'll send you some overlays when I get it because it's really good. What I miss is the really abrupt when it actually does roll over,
Yeah.
like the big one. I'm missing that. So my brain is kind of thinking of a way to. I don't know if you've. It's just that's a super hard thing to get a computer to do, like interpret. So it's one of the things that I've been able to do, and I'm kind of building a system that, and again, it's good enough, right? That's what I'm looking for. And because it's for the times when I can watch the RL10, but when I step away from my computer, I can have it watch the Tilson instead, and it's smooth. So those things, but it's become a little bit of a rabbit hole for me. Like, I mean, I'll be honest, I've now started coding in Python and TradingView because I know it better to confirm things, and then I convert it over to multi-charts, and I'm in a big ditch of just stuff. So
Yeah, finding
but I think it's worth it. I think it's
building
worth
the better mousetrap, for the kind of moving averages to guide. There's a lot of specialty programming that comes out of the world of digital signal processing, which is concerned with identifying signal from noise in a communication channel. And the idea being that when the signal changes, there's something other than normal noise that's involved in there. And that the sooner that we can detect the true change in signal and denoisify it, there's volumes have been written on
was
that
there a
stuff.
guy was there like a technical analyst that did that a lot?
Yeah.
Was it Eller?
Yeah, Robert Ehler,
EHLER?
EHLER, he was kind of I think of him as sort of the leading edge of that kind of analysis. That spawned a bunch of other quants and electrical engineers that took what they were doing with trying to just improve the quality of signal going down the line on motherboards and in semiconductor architecture, and try to convert that into analysis of price movement. And the argument being that there was some signal generator that reflected the psychology of the traders, and that was generating price action of a certain type, and the price pattern was reflective of their state of mind. And if their state of mind changes and they're using different behaviors, that would be reflected in a change in the price pattern. So if you could detect the difference between the underlying pattern, then you would know that the trend just changed at that moment, and that all of the other things were just the ordinary noise in the channel. So you can spend the rest of your life exploring some of those different theories. At some point,
Yeah.
you know, good enough is good enough. Tilson is one of the, is pretty well respected for what that thing will do. I'm trying to think of the other guy's name that begins with a D, who had a series of specialized oscillators that compared pretty well to like conventional EMAs and SMAs of various types. And
I think
I've yeah, go ahead.
yeah, go ahead.
Well, I've just sort of
The
adopted the posture of just having the idea of the frog box or the fractions of the frog box is really just a simplification of that overall strategy that looks
yeah,
as,
so
hey, there's the noise boxes following you, and the width of that thing is sort of normalized for the typical noise in that channel, and it's like a steady state buffer, and it doesn't try to fine tune the moving line as much as it just says, hey, follow with the noise box. And once you get out of the noise region of the entry and you've locked in a gain, now you're just going to be that's a good trade. It's going to be positive, and then just
right.
tune the box to your till you're to the point where you're comfortable managing it, and you don't fiddle around with it, so that you can take a lot of trades with a standard management
Yes.
technique. That to me is sort of the good versus the best. I want a good enough, it just has to be just good enough so that I can use it on 10 different things in a routine way and then occasionally dial in and fine tune.
But you still have the problem. What we talked about 2 weeks ago is the problem of what direction do I make that frog trail? Which direction do I go? Because in the morning the RL goes like this,
Right.
and so to tell it what direction, so that can I have 10 different
Well,
signals
here's
going,
so
and
there's
it
two
picks
ways.
the best direction.
There's two ways. You either try right from the very absolute moment of opening with the bracket of like a R5
Yeah.
or an R10, you just take the first breakout and then you just go. Or you just say, I'm going to give you the first move. I'm just going to give it to you for being the first mouse. You're awesome. You go from the opening in any direction you want until I get a large enough move that I say is uh, uh, unambiguously, that was a large move that I wish I had made. That to
Yeah.
me, that's a frog box to 1.5 frog boxes. If it
But then
moved
is it
that,
going to reverse? Is it going to
well,
reverse on it, or
well,
can it
here,
keep going with it?
well, stay with me now.
Yeah. Okay.
If it makes that harsh move of 1.5 frog boxes, you wait for the next doji and bracket that with an
Yeah.
R10, and
Yeah.
you say, I'm going to get the counter, I'm going to get the second move. And the bigger the first move is, the bigger the second move is going to be. I just don't know which direction. So I got to find some point at which there's a doji. It has stopped falling but hasn't reversed yet. Or the R10 reversed significantly and it moved the R10 or R5 box and has started the reversal. And now I'm in the SSC. Or it came to a doji and I bracket it and it fails. So it's going to be another leg in the same direction. Now that's the strategy of the SSC, which says, I give you the opening. I'm just going to give that to you.
Right.
So you got it.
Yeah.
You're a better man than me. You got the stomach for this or whatever. And I'm only going to be attracted to symbols that have now made an unambiguously large move. So if I'm tracking 10 things that I think, if 10 of my 30 that I watch, if 10 of them that are most likely to have big moves that day, I'd say I'm going to arbitrarily take those 10. Why would I pick those 10? Well, they have a mechanical swing trade set up. Is that it? It was a big move yesterday, or there was a big gap today. All three of those reasons are reasons to favor one of those symbols as being one of the 10.
Right.
And then I just say, all right, whichever one of you 10 is the first one to make the unambiguously large move, that one has most of the attention, and I'm trading you. And that's how I quit.
Yeah.
find the movers. But that strategy says you're willing to just give them the first move, no matter how big it is.
Yeah, and the first move's terribly hard, especially if you're not
Yeah.
watching it.
Yeah.
Like if I'm trying to code the first move, it's terrible. It's the
Now,
worst.
the footnote to that is the gap. And you've heard me say it a few times now. If there's an abnormally large gap, I'm instantly ready to trade it with the R5 or R10 breakout right away.
Yep.
I'm just going to try to be with the first mouse. And the
So
reasoning is the size of that abnormal gap equals the unambiguous first move. Because it's so large and abnormally large, it was like, wow, that was an unambiguously large
like a
gap.
frog box would be three R10s or what?
I would say it's the absolute value of the average gap of the last 200 days plus a standard deviation. That by definition, and you got to take the absolute value of the gap so that you don't get, yeah, I had a huge up gap and a huge down gap,
Yeah.
and the average is no gap. Well, that's not helpful. So you got to take the size, the absolute value of the gap for the last 200 days. So now you've seen all different kinds of market conditions and opening response to overnight news. And then you take the standard deviation of that and you add that to the average. Now it has to be a gap larger than that. That means only one time out of 6 was the gap ever larger than that. And that is my working definition of a
Right. Okay.
abnormal gap.
Yeah,
That
that's
is the
good.
gap stat.
Yep.
So if I see that kind of move from the close to the open, I arbitrarily say that was the unambiguous move expressed in the gap. So now I can take the next move, which is from the open. I just bracket it with an R5 or an R10 in a box on either side. You decide, and then take the first move, and then off we go, just like it was an OR3 or 10. Without that big, unambiguously large gap, my recommended strategy is just wait for the one that made an unambiguously large move and take the SSC and then keep doing kata twos until that fails. Or if it goes the other way, take the collapsing dragon out of there and you're going to get a second leg equal to the first leg. Now, that's my starting position on teaching this strategy. Why? Because it gets you out of fiddling around with what to do at the gap. Now, if you're ready to trade right from the opening and you have a large gap like I described, I already told you what to do. Right from the opening, you bracket it and then you take the move and you get your risk out and then you go. If you don't have a large gap, that's where I say you got to give them either 3 minutes or 10 minutes to decide to get rid of the noise of the opening.
Right.
Then pick up the directional move. That's the idea behind the OR3 and the OR10. So that's sort of that. The one final refinement on that. You could have that as your strategy because you're going to say, hey, there wasn't any gap, so I'm going to wait for 3 or 10 minutes. I go ahead and, you know what I do every day anyway? I just put the R5 or R10 bracket on it anyway. Because even on days where there wasn't a gap, sometimes it just goes. And it's like, God damn it. It moved.
You mean from open?
Yeah, right from the open. And there was no gap and there
Yeah.
was no reason to expect it to do that. And the son of a bitch will just keep going. And it's like, God damn it. So I just put the gap on there. And if it breaks out of my R5 bracket, I just go. I don't even wait for the OR3
and
R10.
That's probably, and then we kind of discussed that 2 weeks ago, and I kind of started on the whole thing of trying to figure out what that math looks like so I can understand it and figure out when does it go off the rails. Because that's what I'm finding right now is that you have consistency in how things operate. I think Jay finds this, like you've been saying, the volatility is not there.
Yeah.
So he has to change everything he does because of this current, right? And now it's there, and you're like, "Ooh, I can make money again."
Yeah, except it's
I'm
already
like any kind of an automated thing.
It's already coming back towards no volatility.
Yeah, no, I get
after
it.
that. Those last 3 or 4 days have
but
been
it's
just
that
fucking
thing
brutal.
is how do you, right? Yeah. But how do you code that to say don't trade today? So I still have this fight, and it's my problem, I guess, is that I see a problem like, well, I should be able to figure out a way to determine which of those three things you just said to do. And I'm like, well, it's really hard. It just
Right.
it's
Now,
hard.
now
So I'll keep that's my project, I
in
guess,
this in
right?
this
For
in the
right now.
sniper system, in the sniper system, the way I handle the current definition of volatility is I use a 5-day range from the last 5 days, high minus low divided by the closing price. That's that's a percentage of its price, and that's the 5-day volatility. It tells you the total distance between best to worst. And so I study that the last 30 5-day periods, and that gives you now you can take the most recent 5 days and put a z-score on that. And I say, if
Hmm.
that's abnormally quiet
Okay.
or abnormally large, I know what to do. If it's abnormally quiet, then what I have is it's like a 5-day doji. For 5 full days, this thing was conspicuously quiet for 5 whole days. And now I'm ready to play the breakout of that instantly. A large 5-day range says this damn thing is in play on a swing trade basis. Now you get two forms of that. One of them is, imagine you had the 5-day and this is my favorite, the 5-day abnormally quiet. Beautiful. I bracket that whole thing and just play the breakout from the 5-day high or low. Sometimes the first day that breaks out of that 5-day quiet is the big bar. It's an elephant bar. And that one could be so large that the new 5-day volatility, which had 4 quiet days and 1 elephant bar, that could have been so big that it's now an abnormally large 5-day range. And yet you got alerted after that was only the first day of volatility. Chances are tomorrow's going to be a big day too. And you're going to get the second day and maybe a third day of directional momentum. And if you read all of the swing trading guys who are looking at daily bars and are interpreting it with Japanese candlesticks, they say, hey, look, 3 soldiers marching. That's 3 above average range days that are mostly real body and very small wicks. And that's the signal of what could be an amazing new trend in that direction. Well, if it is, that thing's just going to keep going. And you got in on day one.
Mm-hmm.
And your risk box was mathematically the smallest it ever could have been because you started when it was a 5-day pinch. And that was the size of your risk. So you got a massive payoff on the first big day. And then that thing just goes for a couple more days. And now the swing traders are now persuaded 3 soldiers marching. That must be good. And then it finishes up with a doji on the 4th or 5th day and say, oh, that thing is done. There's nobody left in the swing trade environment that wants to chase it any further. And that's your morning star. And on the other end, that's your hammer.
Yeah, it just finds the bottom.
And
yeah.
so that's where paying attention to price behavior over the last 5 or 6 days can be a payoff instead of just looking at the intraday stuff only. Where it is inside that swing channel now can influence you on how to not be surprised on big days with big bars because of the patterns of the last 5 to 10 days. In a certain way, those mechanical swing patterns that tell you you're in a critical state behave the same way. But what I've been doing with the sniper strategy is just kind of picking the 5-day volatility as a reasonable measure of average swing trading psychology. I just say, if that thing was abnormally quiet, then there ain't a swing trader alive who's fired up about this, and they're all going to be surprised when that first breakout occurs. So that's why I picked specifically a 5-day volatility window.
Mm.
Now I just use on the one that's in EdgeRater, it looks at the last 150 days. And it picks 5 days, then 5 new days, then 5 new days. So it has 30 sets of 5 independent days. And it uses that to construct the average and the standard deviation. The way I recommend you do that is to look back 150 days, but to just march that forward 1 day at a time with a new 5 day set. So instead of 30 sets of 5 day volatilities, you actually have 145.
Mm.
And now you have a lot more fidelity
Right.
about what 5 day volatility looks like in this market. Now that's not in EdgeRater, but what's in EdgeRater is workable. So I'm not doing any harm to them, but they don't need to know all the secrets, just good
Right.
enough secrets.
Yeah, I think I can do that. Yeah. Now that that's good. Okay. I'm gonna research that, and we've had some.
Now I want you
Yeah,
to
no,
work
that's
with
good.
Sundeep Gupta on he's in cohort 1.
Hmm.
Now he's a signal processing engineer and a
Mm.
dynamite coder and now a full-time trader. And he just accepted the handoff of the TC2000 bundle from Danny, who was the Israeli hedge fund manager who's now doing more advisory stuff with that package and didn't have time in maintaining the package, but Sundeep does. So he's getting read on to the whole TC2000 code, and he's good at coding that anyway. So there's an opportunity in there to express that in TC2000. And then I find that Claude does a very good job of providing coding for TC2000. So being able to translate TC2000 code into Python seems like a natural fit, through Claude. And then there's a way that you
Right.
two can compare notes with respect to trading
Hmm.
trading code.
Yeah. Okay. But yeah, 2000. We had talked about that before, and you didn't think that was suitable for me necessarily.
Yeah, well, what I said
Still
was
probably isn't. Yeah.
well, I think as a platform, it's fine. I just didn't want you spending $5,000 on the total
But I
package,
can't trade it because I'm a Canadian.
and
I
Canadian
can't
because
trade with it.
you're up there.
Yeah.
So, oh, sorry.
I just use it for data.
Yeah, yeah,
But
yeah.
yeah.
So
Okay.
I wouldn't.
I'll,
Yeah, if you can't trade with it directly, then I didn't want you spending $5,000 on that
yeah. Yeah.
on the entire
Yeah.
package.
Yeah.
But doing some research with Sundeep to develop some new code chunks to increase that package. You and he can probably work out some deal. We're just working on the code level without paying a fucking the bundle fee. Guys that are actually
Yeah.
doing the hard work in there. I don't want you buying the package for that. So,
Okay. Good.
well, that was a long way around. Jay's being patient.
Yeah.
Appreciate it. What
I
you got
tell
there?
you,
Yeah. Thanks, Jay.
yeah, no worries. Can you pull up a chart of the SPY today on a 5 minute? We could look
Yep.
at it together.
Yep. Let's see here. Sure. I just happen to have.
Okay.
Just a second. Let me shrink. Whoops. Happy mouse here.
Yeah.
That's probably close enough. Let me get this 4 p.m. Yeah. So that blue box, if I've drawn that correctly, is the first two. Yeah, that's the first two 5 minute bars. And
Okay. So here's my question if you're looking at that, right? And this is where I want to kind of hone in on something. Okay, so and just I just want to know if this is enough evidence to make a trade, right? So a couple things that stand out on this chart for me. One on the OR5. Okay, so once it breaks out, you say, how good is that move? Well, it's abnormally good because it's way outside of the Bollinger Band mean.
Yep.
Okay, the dragon, right?
Yep.
So now, before the RL10 curves over, you've got dragon horns right there, correct?
Yeah, this little gizmo right here.
Yes, that's the dragon horns,
Yeah.
right?
Yeah, reasonably.
Okay,
I don't have the Z3 lines on there because I was fighting clutter, but that feels like a reasonable place that I'd call that dragon horns. And
yeah.
only
So
because the Z3 lines were probably down here, and then because of the size of that move, that's
right,
going to be well outside the Z3 line, which carries over the information from the previous day. So that's going to be a dragon horn for sure.
yeah, for sure. Okay, so that I saw the trade, but I didn't, I didn't quite catch it. I'm not sure if you would say, had you entered there, would you say, okay, the first target's got to be the skin of the dragon, right?
Yeah, for me that just my normal behavior is I'd be expecting myself to be entering right there on like the third 5 minute bar, which takes out the OR5. And then I'd be looking at I'd say my clear that I can't see SPY. Its R10 is a dollar. So if R10 is a buck, then the R5, which is two of those, is $2. So here are the logical places to me based on price to put a stop. I would say the first place that I have any evidence that it's failing is if it crosses below the VWAP, the orange line. So I could say, well, if I put a stop just below the VWAP, that could kick me out. And that turns out to be something like that's almost a dollar if I were to draw that line. So it's maybe 75 cents or a dollar. The next logical place would be if it breaks to a new low of the day,
Right.
which would be 536 and a quarter. And if I entered at about 537.75, that's about a dollar and a half. And that's larger than an R10, but not quite an R5. That looks to me like just a logical place to put it, because my hypothesis is if it breaks below this red line, which is the working low of the day, which was made in the first 5 minutes,
Right.
then the next target is going to be yesterday's closing VWAP or the Bollinger Band mean or this somewhere in this cluster, right? So if it breaks down below that red line, it should get down to here pretty easy,
Yeah.
to
Well,
533 and a quarter. And that is $3. That's about a $3 move.
which is 30 on the S&P. That's
Right.
huge.
Yeah.
So yeah.
Yeah.
So
So that,
but my
yeah. And
my,
then if I'm using a dollar and if I was using a dollar and a half as my sort of standard risk box for the day, I have reasons to believe it could get up to here. So a 2-to-1 to the upside's there, because this is only 1/10 of a range stat. So it could make 9 more of these boxes before it becomes an abnormally large day. So the upside is already taken care of. And then if it does fail through the red line and just goes to the expected target, it's got 2-to-1. So I like that trade with an entry at the green dot and an initial stop at the red line. I like that in both directions. I take that one sort of like automatically. I would
so
take that.
and I see this pattern a lot. Okay. And again, I'm not trying to hit home runs. a $5 to $7 move with 10 to 100 contracts or 200 is plenty. Okay. So my next question is, and this is what I struggle with the most, is you see with the RL10, it came below the dragon, right? Now it's hooking back up.
Yeah.
Okay. So technically, and this is a 10-minute chart, but on the 5-minute chart, where the RL10 hooked over,
Yeah, this
the
is a
PSAR.
5-minute chart. This is a 5-minute chart.
Okay. Well, so on mine, I had a PSAR flip. No, that's a 5-minute chart. You got it. It's hooked up there in the top left. It's highlighted in blue.
Yeah, yeah, that's what I said. I'm on a 5-minute.
Right. Um, but so technically, you should buy when the RL10 crosses the dragon at, I can't tell what time it is, around 11, before 11 a.m. Right there,
You
right?
mean shorting? You mean shorting right here?
No, you buy long where the RL10 crosses it,
Oh,
right?
when it comes back here?
That's right.
Yeah,
Yes.
yeah.
Okay. And you had a little bit on a different time frame. You had, you did have, at like 10:30, you did have a little hammer candle there. But my question is, so the RL10 never came through the dragon until a very long time, until like almost just before like 2 o'clock,
Yeah,
1:45, right?
right around in
How
here. Yeah.
how do you stay? And again, you got another set of dragon horns at the top up there, like about 1 p.m. Small
Yeah.
ones,
Yeah,
right?
this little that
Yes,
feels like it's stalling, and then you
yes,
have, you got 40 minutes of just nothing. And I
that's
just
right.
say, and to me, uh, if this was your executional risk box right here, and you said, look, I'm going to treat that as a cotta two. I take this first one and I probably lose a little bit because I got to get out somewhere around here. Until that thing breaks below that red line, I just think this is kind of noise. I'm either going to go short if it violates the red line, or if it gets like above here, that's sort of my entry of last resort. But if I see this, where it now crosses the dragon, it crosses the VWAP, it didn't fail any further. I re-enter here and just think of that as a cotta two or just a re-entry, because I'm re-entering about the same price I tried before. And then
I,
on
I'm
this
just
one, yeah, go ahead.
I'm just trying to really, I don't know. I mean, I know that the RL10 is the last, it's
Yeah,
least squares moving average, the last 10 bars, right?
yeah.
So, but I'm just trying to get, I get, like when the price is going through because the options move, I guess, so much more than some of the stocks.
Yeah.
How do you not get shaken out of that trade? Because the RL10, if you just look at the RL10, it's like, I don't know. Sometimes I think I'd be better off to take the candles off my chart to begin with.
Yeah, I've done that before. The farthest I could do that and maintain sanity was to have it on the palest shade of gray that I could, so that I could still see the tails. But here's, the simplest way that I would say is, look, if this was the size of my wrist box, is this box right here? And if you just say, let me take that and trail with it and see, when does it get me out? Never, never, never. Yes. So I would take that as a perfectly reasonable place to exit. It came down and guess what? It touched the PSAR minus one, basically. So that to me is a perfectly reasonable trade. And all I did was trail with this little initial risk box. Right. And then if I look at that here, that looks like just about 2R. And that gets me out. So that's a move to. All right. So that's about a $2 move. And in the ES, that's like $20.
which is gigantic.
Yeah. So, I mean, that's the trade. And then the re-entry is, oh, it didn't even come to the Bollinger Band main.
Right.
It didn't even come to the VWAP. And so now here's your 1, 2, 3 re-entry. If you're still hungry. And I just have to live with that, with the fact that sometimes, like in this example, that was as close to a bottom tick as you're ever going to see. That was price that came down and just nudged the PSAR. And you can't tell in that moment that, oh, that all it did was just nudge it, so I'm going to hang on because I know better. No, it touches the PSAR, I just get out. And I just say, well, that you made me get out. And now 2 bars later, you made me get back in up here. And the cost of my insurance was the difference between those 2 green lines. Because I had this in hand and then it retraced. And so I got out here. I got out there and then it took that much to get me back in. So I lose that section. But by getting out here, that's insurance against a return all the way to the VWAP, which is like 1.5 of these risk boxes. So that's just sort of the nature of that decision rule. That's where it loses on the margin. But then now if I'm in my second leg up now, because now this one, oops, sorry, that's yeah. So now this re-entry here, which is the 1, 2, 3 entry, after this successful trade and gets out here and then re-enters here, that one moves up into here. And now you decide, skin of the dragon, maybe, or not later than the PSAR, and you get a fractional win. You get about a half an hour win. But now I look at this and say, I'm probably done for the day. Because there was a bunch of guys that won here. There's leg 1 is this. Leg 2 was much smaller. And now leg 3 goes from here to here. So you get this kind of leg 1 was big. Leg 2 was medium. Leg 3 was small. And now we're done. So in my view, I would expect to lose half an hour in here with slippage from buying here and then suffering a loss or an exit there. And that's if I didn't just scratch and get out. But I would treat that as, minus 0.5. And this one should give me +2. And this one gives me maybe 0.2. So I should make somewhere around 2R on that kind of a move on the 5-minute bars.
Okay.
3 minutes, I don't know if it's if it's going to be much different. Probably the same, if I'm marking this up real quick, I'd say, I'm probably, come on, Ken. I'm probably long somewhere in here. I probably get out here, so I lose a fraction. I like this. I like that. I got to get in somewhere around here because I've crossed the VWAP. I've got a 1, 2, 3 entry. It hit the PSAR. So I can use that. Now I can use the PSAR as my
Why
risk.
get long there at the beginning? Why would you not say, how good is this movie?
Oh, I look at this. I say, this goddamn thing jumped up completely above all previous. That's a large gap up. That went from 532 to 536. For me, that's a $4 gap. For you, that's a $40 gap.
Right.
So there's something. But if I look back further, let me clear this out. Yeah, I mean, that's sort of why this thing, that's the last 7 or 8 days. And when I look at that thing, if I take this as the noise box, something like that's all the noise of the last 10 days, which included the previous normal up here and then the harsh sell off all the way down here. This level right here feels like the upper limit of this entire noise move. And look, you got the 3-day anchored VWAP, um, the 10-day, the 5-day, and this thing gapped all the way up to here. It has left all of that behind. That's fresh and new. And what did it do? It came back all the way to the previous normal. So I just take that as a sign of a positive potential. And it did that in a head fake, and then 1, 2, 3, and then chop. So that size of a gap that cleared all of this support and resistance, but still offered opportunities in this space to get back to the previous resistance, makes that a directional trade. Day one, new directional trade, return to previous normal, leaving behind all of the fear. And this is evidence to me like day one of growth.
But am I correct? I'm not wrong in saying, I would be betting it's counter trend because it's a huge $40 gap.
Yeah.
Right?
And well, that's why to me, if when I was evaluating that trade then on the fives, that's why I frame that in both directions and say, is this trade qualified to go in both directions? Is there at least a 2-to-1 in both? At least a 2-to-1 in each direction. If I take, the $1.50 as the sort of this a reasonable current risk box, an entry here that used the low of the day, it takes price crossing that low of the day to persuade me that the upside isn't happening. That's definitive proof to me. Because then it's everybody that's ever read a book would say, "Oh, you fade the gap, dummy." Okay, fine. So if this $1.50 risk box was the first signal, hey, I got 2 of those just to go back to the previous VWAP. So this thing is a 2-to-1 here, and that would be the counter trend rally that you're talking about, or the not rally, the counter trend failure, or the counter trend reversion to the normal. That would say, oh, that gap and this initial move up, that was the fake. And even if I waited for it to cross that red line to confirm that it was a failure, I still got a 2-to-1 trade back to just to the VWAP. So that's a legitimate trade. And then I can see the previous high was way up in there. I can go, well, that's 1, 2, maybe even 3-to-1 to the upside. So I got out of that blue box, I have a 3-to-1 on the upside and a 2-to-1 on the downside. Therefore, this qualifies as a compound critical state. This is a region of uncertainty in which a strong move of large proportion is perfectly reasonable. So now I don't have a directional bias. Hey, what if this thing hadn't gapped that far? What if that thing had only opened here instead? Well, that's not much of it. This little gap here would not have been much of a gap at all. So there's no burning urgency. That's where I would wait for the OR 5 or 3 or 5 or 10 and just say, look, I'm ready to go on the third bar or something like that. But a big gap up, I'm justified in just taking it right away. In this case, it was just a standard OR 10. But I'm also ready to go this way too. So I don't have a directional bias. In this case, it started making that move and I'm happy. On my best day, I can just scratch. On a usual day, I'm out here for a fractional loss. I'm not interested in shorting it until it gets down below that red line. That's the first time it's a non-noise signal to me. And I can wait that long because I've got 2 units of reward using this standard that blue box turned out to be about $1.50. That was right in between the R5 and the R10. We were laughing about that last week. Yeah, that's the R7.5. Okay. So just using that as a rule of thumb, that $1.50 is a reasonable amount of manageable risk, and I can still get a 2-to-1 on the downside, 3-to-1 on the upside without straining my brain. So that makes this a perfectly, hey, well, it lost traction, and those guys all the guys that are selling in here, I guess, were making money because they bought here. They bought inventory here, and it gapped up, and as soon as it started rolling over, they started selling hard to cash in all of the gains they made on the overnight hold. Or they're just selling inventory hard to see if they can shake people out or whatever. I don't know I don't know why they're selling, but they sold off in an orderly way through the VWAP, came down and held around the PSAR, and then it clearly crossed the VWAP and the dragon, and the R10 rolled up. So if this was the highest high of the day, I gotta be thinking I gotta get back in on a new high of the day. Even if I got shaken out in here, that's new information. And there's still plenty of room to the upside towards the range stat. The range stat on this thing is $10. It's up around 546.
Yeah.
Or 54.60. So there's plenty of upside for me, even if I waited that long to re-enter. But I can actually justify an entry in here because that's like a COTA 2. The PSAR held, it crossed the VWAP, it crossed the dragon. Look, the dragon's even rolling up. I take that one all day without hesitation.
Okay. Thank you.
And then if that one, and this is the one here, if that one gets you out, then you just say, well done, guys. You calibrated me to perfection. You touched just the very edge of that little dot, Now, if I'm being honest, if you use and I'll see if I can zoom this in a little bit. If you use the PSAR -1 on a strict technical basis, it doesn't get you out.
Yeah.
Because let me see if I can shrink that up a little bit. Where was he? Maybe it does. I don't know. Anyway, I don't mind taking that exit and then just re-entering and feeling silly for being chased out. I just hope I'm always that silly. As long as I can re-enter when I'm supposed to, I get that partial second trade or that partial third trade on the second leg, and I'm happy with that. For every day I get bottom ticked. Yeah, where was it? It was this one right here. Yeah, okay. That one should get me out. This one should probably get me out. Maybe I don't know.
But the RL10 never goes there.
Right. But what I'm doing is when you have this kind of grinding move up with prices are going up in a nice orderly manner. Then the R10 is very smooth and it's also orderly and it's going like this. It's just happy. When you get a sudden change of direction, those first two bars could be like this and then like this. And at the close of the second bar, which is down here, then you have enough new information for the regression line, the R10 to change direction and roll over. And you say, oh, I'm supposed to get out. Yeah, but price is already down here. That's like the risk. Like on this one, on this bar right here, that's a significant change from any of these previous 10 bars. That's the only bar in that stack that looks like that. And if you get another one of those, it can be down in here and price is already through the PSAR and the R10 would have just rolled over and been about here.
Yeah.
So I just couldn't stand the idea of entering here, managing it nicely and orderly, and then say, oh, you were complacent and it came all the way back to the VWAP and 1 or 2 or 3 price bars. And now the R10 finally catches up. At that transition point, I use price hitting the PSAR and I'm out. And I just live with the fact that sometimes I'm wrong. And I'm not wrong. I'm just electing to be acting on that information. And over hundreds and thousands of trades, that I can live with the consequences of that little bit of give back. Because for every one of those where I say, oh, that was one that didn't collapse, for every one of those, I can find another one where that price just did this.
Yeah.
Because I'm not monitoring news and all that other shit. I'm watching the price and the PSAR. And I'm going to be ruthlessly executing that decision without regret and without second guessing it when I'm in the trade.
Right.
And just like I said, there's as many examples of why that protects you and locks in the previous gains you ever had. And then honestly, if you don't want to interpret that, you can just say, hey, let me just use this this wrist box right here. I can find. Yeah, there he is. That was the one. If our entry was here, that was the PSAR wrist box, if I can say it that way, right? If I come over here and look at the price, that's about 80 cents. So if I make that just a little bit wider and just call it $1, that's about $1. That's an R10. That's 1/10 of the range set. Yeah, that's 90 cents. Hold on. So that's $1 right there. Come on. All right. So that's $1 from the entry. So now if I just go to the high of each little, all right, that pullback doesn't get me out. If I'm just trailing it with that one box, that one doesn't get me out. That one gets me out at about 40.10. That would get me out in this great big bar here. You know. So I can live with trailing it with a PSAR or trailing it with just that box and just let the box take you out. That's what I would call visual box trading. Where you say, I'm not going to let it ever move against me more than the original risk I was willing to take. Especially if I've got a winning trade in hand, you know?
Yeah.
So that's one way to simplify it even further. And then you can say, look, if I get double an average win, whatever my average win is, if I got double that, maybe I just take my risk box that I'm trailing with and just only give back half of that box in order to preserve more of an outsized win. Nothing wrong with that.
Right.
If I was going to do that, I'd add a second position at the same time. Because then if it doesn't get knocked out, I'm getting double sized gains on a really outrageous move. I don't do that with SPY because it rarely has that kind of undifferentiated just move and off it goes. But something like CLF or Devon Energy, the individual stock, sometimes those will just go because there's no other competing pressure to drive it down. There's always reasons why guys need to be selling some of their SPY. But if CLF or Devon Energy or Nvidia has made a big move, then that thing wants to keep going.
Okay.
Okay, that feels like about enough for tonight. We're at about 20 after. I gotta get ready for the next one, and hopefully that was helpful.
Very
Yep.
helpful. Thank you.
Yeah. Thank you.
Okay, fellas, we shall see
All right.
you soon. Cheers.